This is the Working Investor. Today, I wanted to talk to you about the power of option premium and the strategy that I use, which is a known strategy called the wheel strategy. But I use a couple modifications that I've learned from other people, and we all learn from each other. Again, I'm not a financial advisor. This is just some my personal experience. So let's say I'm starting off with $74,000. My goal is 1.25% return per month, which if you analyze it, it's 15% annualized per year. The way I got to 15% is that my goal is to try to get between 12 and 18%, try to hit that goal. Because if I'm getting that less than 12%, or, you might as well just buy, S&P 500 or, you know, Vanguard Total Index or something like that. And, just hold on and relax. So, the reason why I'm doing is to get a little extra premium. But again, that's my personal risk tolerance, my personal strategy, my personal preference. And the reason why I chose 15% is because, there's 6% difference between 12 and 18, and just pick a number between both of them is 15% as a minimum. My only caveat is when I do SPY, I understand SPY has less implied volatility, hence less premium. So I understand that there's going to be less reward. So with SPY, sometimes I would go I would try to see if I can get 8%, 10%, 12%, somewhere in that area. So that's why I say my monthly goal is $1,000 a month, and I've hit it last month, and I've already surpassed it this month, and we'll talk about that in a different video at the end of the month to see where my total was for this month. So the yearly gross would be $11,000. So I'm working with my coworkers, and I'm getting $11,000 more salary than they are because I make my money work for me and they don't. You know how people say, like, oh, I wish I had a clone. I could send my clone to work and I could live my best life and do whatever is meaningful in life and whatever matters most. So here you have it. Here you have your extra, I look at money like it's my worker. Make your money work for you. You work for your worker, you work for your money. But once you have the money in your hand, it's energy, and you can make that energy work for you. So right now my worker is getting underpaid, not happy, getting less than minimum wage. But down the road, if I were to if I add an extra zero, years from now, that worker would be pretty happy making $53 an hour. So going back to reality of right now, so worker is not happy. So this is like a projection, and I'm trying to be more on the conservative side. Yes, I'm making more than 15%. I have a lot of returns making much more than that. But you have to also bear in mind that there's going to be, this is good for flat markets and bull markets, but there's going to be bear markets, and you have to bear in mind about that. And I'm happy. That's why I only choose underlyings. I don't try for the most part to avoid the chasing after premiums, and I chase after first the underlyings, make sure I'm happy to own them long. Um, and doing options could be safer than, in a way, depending how you do it, than owning stocks outright. Because when you buy stocks and ETFs and mutual funds outright, or you're basically long those products. But with options, if you're doing the wheel strategy, you're buying them anyways, eventually through a cash secure put when you get assigned, but you get them at a cheaper price than the market price today. And if you don't mind owning them for the long run, and you would own them anyways, regardless, then you might as well just get in at a cheaper price plus collect a premium, which reduces your cost basis. And then eventually you could sell cover calls. And yes, there could be a significant dip in the market where you may not get much premium from the cover calls to sell it at your cost basis or greater. And you may just sit on your hands for a little bit. And then you could just eventually build up a cash position and kind of dollar cost average in by putting in a new cash secure put at a lower price down the road. I learned that from different YouTubers, that you also want to not just trade horizontally, but also trade vertically. Again, I'm not a financial advisor. So if you look over here, just the 10-year projections. So in about a year, the balance would be about, $98,000. That would be the 74 initial plus the added 11,000%. Again, you have to probably like compound them monthly, but if you don't compound them monthly, like simple interest, simple math, it's about 98,000. So yes, my goal this year is about $1,000 a month, but my goal next year could be, um, sorry, my goal next year would be somewhere like maybe 1,300 or 1,400 a month. So, and if you keep and let's say I continue adding, let's say I add minimum 13,000 a year because there's 26 paychecks in a year, and one adds at least 500 per paycheck. You can add $1,000, you can add $2,000 a paycheck, whatever you feel you can add. You can add $10 a paycheck if you want. So let's say in about 10 years, I would have at least, it would generate at least, $7,000 a month. But again, the market conditions can change, things can happen. So, maybe it'll be 5,000, still not bad, still not bad, still a way to get to, maybe reduce your hours of work or something. But this is just this is my personal journey, my personal thought about it. Let me know what you think. The Working Investor, over and out.